Hello Wolfpack, we're back here with another Bitcoin video today. We've got a pretty interesting daily candle close. We've closed below the 200 week SMA, so this is the 200 moving average applied from the weekly chart to the daily chart. You can see that if we flip over to the 4 hourly and look at the same indicator, there was a lot of contention around this. In fact, a lot of people were getting extremely bullish because this thing was holding for support for like, what, 2 days or 3 days, almost 36 hours. The amount of 4 hourly closes we had holding that for support meant that, people were very confident we were going to get a move to the upside. Obviously, it didn't actually play out. And the reason why it didn't play out was various reasons why it didn't play out. One of the reasons is because this move was overextended. The second reason was that if you look at the 4 hourly chart, we'll go back to it, you can see that this entire structure was actually a double top formation. And if you go to something like the daily chart, you can also see that we had a rejection from this RSI triangle. So we've got this RSI triangle here that's stemming from October 2021. We had a double rejection, double top on the RSI triangle, the resistance line there. So until we break that, it's not looking particularly good for Bitcoin. Of course, as well, this is not of course, this is actually pretty speculative, but I've identified we've got an ascending wedge formation here. Right, so we've got an uptrending line and another uptrending line converging towards each other for resistance. It's a pattern of exhaustion, and it kind of represents the fact that Bitcoin is exhausted right now. Now that's for TA, okay? And there's a lot more than the TA right now, unfortunately, and this is why this situation is very complicated. Now, if we're looking at something like the macro situation, what we can see is that CPI, what we can see here on this website, CPI is coming out in around 4 or 5 days, I think 4 days, and essentially that's the inflation numbers for the US, right? And essentially, we've seen, and as you guys will know, we've seen the traditional markets pump during this rally. In fact, the traditional markets have led this rally, and they've led the rally due to the macroeconomic situation. So in a way, the macroeconomic situation has led this rally, even for Bitcoin. The only reason Bitcoin's gone up is because the macroeconomic situation has looked slightly better, and that's why the S&P 500 has gone up as well. But what we can see now is that going into CPI in 4 days, that rally that's kind of happening here is slowing down. And why is that? Well, it's because we've run into thick resistance on the S&P, right? You can see the S&P has come right into resistance it formed in April 2021, also here in March 2022, also here in June, and it's right into resistance there. We've seen some a doji candle, for example, and a rejection candlestick formation a few days ago as well that was invalidated. But the point is, it's getting harder and harder for the S&P to keep climbing upwards here. In the same fashion, Bitcoin is finding it harder and harder to climb upwards, right? We had a double rejection off the same region, and we're facing resistance that we haven't faced basically since 2022 in this region here, but it's very important resistance zone between 23.8k and 24.2k. So the macroeconomic situation gave light to this rally. It kind of allowed it to happen. But now, unfortunately, the macroeconomic situation is almost on pause. It's like, well, we're waiting to see what the numbers are, because we've seen, what we've basically done in the last month or so, and it's kind of taken me a while to come to this conclusion, but this is what I think's happened. We've basically, seen the CPI numbers from last month, 8.6% to 9.1%. That's a 0.5% increase. That's pretty intense. But now, during the month of July, we haven't seen anywhere near the amount of gains in CPI than we did before. And so that means inflation isn't increasing at the same rate as it was before, which, this is speculative, but it could mean that, hey, people are kind of thinking, okay, maybe the reversal's coming. Maybe the macroeconomic situation is going to get better soon. And we can see this via the forecasts of the CPI numbers. So yes, CPI hasn't released for July, but what we can see is that the general consensus, so this is the market consensus, is only expecting a 0.1% increase in CPI in the month of July. Now, the market's rarely correct. They're not always correct at all. In fact, they've been wrong the last 2 times. But the point is, prior to this, it was expecting a 0.5% increase in CPI. Now it's only expecting a 0.1% increase in CPI. So the market's not correct all the time, and the general consensus is definitely not correct all the time. But the point is, if the general consensus is lower, and they're expecting a lower rate of inflation, a lower increase in the rate of inflation, that's a pretty good indication that, hey, they might not be correct in the exact number, but it's probably going to be a lower rate of increase in the rate of inflation. So this might not be an indicator that, inflation's topped out, but it definitely is an indicator that inflation is slowing down, right? The interest rate hikes that have been put in place by the Federal Reserve, they're kind of taking, they're doing their part now a little bit. Now, do I think we'll see more rate hikes? Yes, of course, I think we will. But again, it's what I'm saying before. It's like, well, the fact of the matter is, it's not as out of control as it was. And that's what the market is telling us. And so what we're seeing now is, well, the market kind of knew this already. It priced in the fact that, it's not as out of control as it was. We've seen this massive pump, and now it's waiting. It's waiting for the actual number to release before confirmation. If the number comes in higher than expected, obviously we reject, and if the number comes in lower than expected, and inflation is in fact topped out, or if it's a very, very minuscule increase, then we might just pump straight for resistance here. And I think we're in the same situation here for Bitcoin. Now, a lot of people... It's interesting how crypto works, right? Because a lot of people have no attention span when it comes to speaking about macroeconomics, but they fail to understand that macroeconomics are basically the driving force of every single move on Bitcoin, right? To a certain extent, especially in a recession. Now, there are alternate motivating factors, such as the 4-year cycle theory. And this is something I want to make very, very clear. This correction from November 2021 did not happen because of the recession. It happened because of the 4-year cycle theory. If the recession wasn't happening, this would happen anyway. How do we know that? We know that because of a date range trend. And if that's not enough evidence for you, we also know that because the S&P 500 didn't even start correcting until January. At January, Bitcoin was already down here at like 30K, all right, or like 35K or something, right? So the fact of the matter is, this would have happened regardless. Now, it wouldn't have been as deep. We probably would have gone to 17K, but the 4-year cycle trend has proved itself time and time again. And what I can say as well, and this is a question that I get quite a bit, if we somehow, my prediction on Bitcoin is obviously this, you guys know this already, Q4, I think we're going to bottom out in Q4, unless of course, 28.6K is broken to the upside, then that would be an invalidation. The prediction, 23.8K would be a short-term bullish indicator, 28.6K would be a long-term bullish indicator, and we've gone over that many, many times. But essentially, until that happens, until I'm invalidated, Q4 will be the bottom on Bitcoin as per the 4-year cycle theory. That's what I'm predicting here. Now, this prediction, in my opinion, has lost a lot of validity, right, over the last month. Now, a month ago, you asked me about this prediction, I'd be relatively confident. Right, I was never actually super confident because it's a date range trend. I'm not going to put all my eggs into one basket, but I was relatively confident. Now I'm only slightly confident. Why is that? Well, it's hard to deny the fact that the macroeconomic situation might be getting better. If that gets better, I don't know how significant a month and a half until Q4 is. We have to remember we're only a month and a half away until Q4. Maybe almost 2 months away till Q4. It's not really that long away. And so, even by 4-year cycle standards, we're getting very close to the bottom. Now, this is all speculation, but what I meant to say about this is that essentially, for example, say the bottom was in at 17K, say that was the bottom at 17K, that would not be an invalidation to the 4-year cycle theory. All right, it would not be an invalidation to the 4-year cycle theory. It would be a partial invalidation of the date range trend that we have identified in relation to the 4-year cycle theory. The 4-year cycle theory is simply this. It is a date range trend triggered by the halving that represents the fact that every 4 years we see a bull market and every 4 years we see a bear market, right? There's no exact date range trend of that. The one that I've identified is a speculative trend. If this is invalidated, if we did bottom out in, where was it actually? If we did bottom out in June, like the 17K bottom predicted, not predicted, but says, then we just have to adjust for trend. It'd still be valid, but we'd have to adjust for trend. It obviously weakened the argument a lot, but it still would be valid to a certain extent. So that's a question I've been getting a lot. It's like, well, if we bottomed out 17K, does that invalidate the 4-year cycle theory? No, but it definitely changed it up significantly. But I think it's really worth realizing right now that if you're bullish macro right now, you're too early, right? And if you're super bearish macro as well, you're being illogical, right? There's no good position to take on either side. The best position right now is neutrality, right? Because the fact of the matter is this: if the macroeconomic situation looks better, the market will move up. If the macroeconomic situation looks worse, the market will move down. We have no control over that, right? So right now, it's not in the control of the 4-year cycle theory. It's not in the control of Bitcoin TA, really. It's in the control of macroeconomics, right? It's much more weight on macroeconomics than there was in the past. And I think that, it's going to be extremely interesting to see what happens. This is what I'm saying to you guys quite clearly is if we break above 23.8K on a weekly candle, I would be buying Bitcoin, right? But I wouldn't be saying that's the end of the bear market. I'd be saying the end of the bear market would be a weekly close above, or even a daily close above 28.6K. That would be, in my opinion, the end of the bear market. But a weekly above 23.8K would be enough for me to start buying Bitcoin. I'd be happy with that. I'd be happy with that confirmation. So this drop below the 200-week SMA that we've seen, for example, we closed above a 200-week, everyone got bullish. This drop below what we're seeing right now, and the fact that we're lurking below it right now is an indicator that, hey, guys, wait for confirmation. You were bullish too early. And it's the same thing with the macro situation. You just have to wait. with these things. It's like we're talking about a partial invalidation of, not a full invalidation, but a partial invalidation of a 10-year trend. We're talking about, bottoming out of a 1 year, 365-day bear market. Like, this is a big thing. You can't just, you're not going to catch the bottom. And this is something that I've said to a lot of people, like, catching the bottom on this kind of thing is extremely difficult. We were, short-term bullish on this macro uptrending line. When we came down to this macro uptrending line, I wasn't saying, be bearish, sell. I was saying, hey, this is a bouncing zone. So in a way, short-term, yeah, like, you can trade the bottom, whatever. But like, I don't know many people who are predicting that to be the confirmed 100% macro bottom. Mega Well Crypto, he's probably been the biggest guy out there who said this is the most likely place to see the macro bottom. But the fact of the matter is no one could be certain at that point in time, because again, a lot of it lies on the macro. No one can be certain yet either, because the confirmation has not yet occurred. I'm just saying, stay neutral. Being overly bearish and being overly bullish in these regions, they're not going to get you anywhere. And I know a lot of people are very, very misled by the fact that my fonts are red and I say things like we're in a macro bear market. Well, the reality is we are in a macro bear market. But that doesn't mean you should be overly bearish and selling and shorting every day, because that's not really how it works. It's a bit more complex than that, right? So that's what I wanted to say. But yeah, essentially I'll end the video there. Before we end the video, Wolves of Crypto VIP. We have a VIP membership. If you guys are not already enrolled in that, go ahead and check it out. You don't have to enroll, but go to my YouTube homepage, click the join button, and it will bring up some information here, including an altcoin trading signal every second day. We trade a sub daily on the VIP channel, prioritize reply to comments, a 2-hour lecture on market psychology, and an exclusive Telegram group access where we post charts and discuss market ideas. We've also got the BitGet Exchange. I recommend that everyone watching this video right now goes to BitGet using my referral link, signs up, takes 5 minutes, non-KYC, half the fees of Binance, copy trading. We've got USDT futures, USDC futures, I think 60 or 70 trading pairs on the futures. And again, decentralized, like to a certain extent on an individual level, it's decentralized. There's no KYC, well, it's optional KYC, you can if you want to. And so it's good for, for example, government regulation on cryptocurrency. In Australia, for example, most centralized exchanges don't allow futures trading. This exchange, you can get around that quite easily. Sign up using my referral link in the description below, takes 5 minutes. And then also, of course, we have the Crypto Academy, a company developed by myself and Mega Well Crypto, the Become a Trader 10-unit course, essentially a course that goes over 10 units with slides, videos, 8 worksheets and a trading diary, teaching you how to trade, essentially teaching you what everything means, teaching you how to apply it in trades, teaching you how to use exchanges, basically everything. And it doesn't matter what your skill level is, you can get a lot out of this course. So if you're interested in that, Crypto Academy courses at gmail.com. Throw us an email. We'll send you back some information about it. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.